Good evening and welcome to the Tech Show with Derek with iLi Academy. Today is Wednesday, October 21st, 2020. So today has been a good day as far as trading goes. Across the auto traders, we've definitely been getting some good orders, some good executions, and some closes in the trades that were pretty good. So, or I can actually say yesterday's trading day now because we're into a new trading day at this time. But yeah, it's actually going pretty well. The trades are triggering and being taken properly. So we're finding a lot of opportunities in the market. So I want to take some time tonight and just kind of go over what I see here on the charts tonight. Let's kind of take a look at what we've been looking at, for the last few days and see, now that we've pretty much kind of set some direction and got some feel for what the market is like this week. Let's go ahead and take a look and see what we have going on our charts to see if we've got some opportunities to trade. I think right now we should have some decent opportunities. So let's take a look. We're going to look at this Aussie CAD right now. On the Aussie CAD, we see that we did get a really strong pushback towards our 720 here. We actually pushed back the rate past our 200 EMA here. It's sitting here between the 200 and our 720. So this is good because we can place our orders here, short orders here on the 200. The 100 is fairly close. I mean, the 50 is fairly close to our 200 here. So it's fairly close anyway. So that's pretty much the same area. So we can drop our orders there, or we can drop our order here on the 100 if we want to just be a little bit more conservative in the entry point. But overall, we're still underneath the 720. So that's why we still have to respect the fact that this could actually come down, no matter that it is, got a head of steam to the upside right now. That doesn't mean that that's the direction it's going to continue going. That doesn't mean that's the direction of the flow. So we're going to go ahead and, kind of hold on off on this one. Our moving averages are not really, they're kind of trying to set up order to the upside. But we don't really have order to the upside or downside. Even if we did have order to the upside, rate is below the 720. So we're just going to kind of hang out here and not really do anything on this Aussie CAD. As far as the Aussie yen goes, we have trend to the downside. We have a mature trend to the downside because all of our moving averages are in order and they're underneath our 720. But we're running into this floor here. I'm going to go ahead and put my crosshair on it. You can see this floor that's developed down here right around 74, the 74.20s area, at the low about 74.20 itself. Most of the bodies of the candles are hitting right around 74.24. So we've developed a floor here, but we're underneath the 720. Our moving averages are all in order. So once we break out of this support area, I think that there's going to be some definite movement down. If we can get a push past that, I think that we extend a little bit. So we've been in this area just for a couple of days now, just kind of hanging out. We kind of touched this area before. We kind of got down around here back on the 15th or so. And then we pushed away from there. We hadn't revisited that again until yesterday, this area until yesterday. So now we're back in this area. We keep touching it. My feeling is that since we do have trend to the downside, that eventually we break that level and continue on down. So at best, what we can do right now is wait for pullbacks, above the 50 or the 100 for our entries south. Let's see here on the Aussie New Zealand. We did get a pushback here against trend. You can see that we've got pretty much a full mature trend here. We did get a pushback in the rate past our 100 EMA. So we could have dropped our order here on this 50, and the very next candle we would have been placed into that order. And then, proceeded down like we are now. We're at the 106.72 area right now. So, maybe there's still some movement, some progression to the downside that we're going to get here. Our stochastic down here at the bottom is well below our 20 level as well. It's been down there quite a bit. So it tells me that there may continue to be some momentum to the downside here. Now, this is quite a big candle. It is getting a little bit away from our 50 moving average here in blue. So when we start to see that, sometimes we tend to pull back a little bit. So that's why I say we wait for those pullbacks before we enter. We're not going to jump into this because it may very well pull back and just cause us some agony and pain just waiting on it to actually, to get back, to get back below this current level. So it might take some time. It might take a couple of days to actually fall back enough to make us profitable. So if we don't have to catch that ride, we're going to try not to. We can't always avoid it, but if we can avoid it, we're going to try to. So looking at the Aussie US on this 30-minute chart, we have rate that's trading below our 720. Our 720 is up here in this pink color. We are trading below that. Our opportunities then here were going to be on our 200 or our 100, placing our order as a short. Our 50 would have been a place to place the order as well. Even with the moving averages setting up order to the upside, we're still below our 720, so we kind of respect that. And we place our orders out front. Now, if we placed it on this 50, we would be in that order right now. If we placed it on the 200, we might have been placed into the order for a sell here. And then if we're on the 100, we may or may not have been placed in an order here just yet. But as you can see, it doesn't go very far. If we're going to continue down, then we're probably not going to get a bounce very, very high before we continue down. And that's the hope that, that we have. It's not always going to play out that way. But what our hope is that, we catch the momentum to the downside. So that's why we place our orders out in front of the market. Just coming to pick us up when it picks us up, and then it should take us with us in the same direction. That's why we try to trade into direction. On the CAD yen, that's a 15-minute chart. Let's jump out here to my 30. It should be on our 30-minute chart. So on my CAD yen 30-minute chart, we can see that rate is below our 720, which is kind of cruising along in the middle here. We have our moving averages set up to the downside. So we do have full trend. We're just not a mature trend yet because our 100 and our 200 are still above the 720. Nevertheless, they are still in order to the downside. Rate is below the 720. If we pull back past the 50 or to the 50, then my order probably would be placed on the 21 at this point in time. If we get back too much further than the 50, then we're flirting with the 720. So I might leave this one, in that scenario, I'm probably not going to place my order on the 50 just yet because we're too close to the 720. And the other moving averages are still on the other side. So the only opportunity I really have is maybe a trade off of the 21. I'm going to be a little conservative there. I don't like it to be so close to the 720 and then have other moving averages on the other side because this can reverse on us. It's a yen pair too, so when they get ahead of steam, they kind of move on and do their thing. So you don't want to catch that falling knife either, right? As far as the Swiss yen on the 30-minute chart, our rate is directly on our 720 right now. So it's just sitting there. It's acting as a support at this point in time, but we're going to find out whether that holds for us. It's just sitting there at this point. I'm not going to trade that. That's not the one that I want to trade right now. If you look at the other moving averages, we're not quite in a full trend or anything yet. They're above the 720. If I'm doing anything here, the only thing I might do is place my buy order on the 200, 100, or the 50 in this area, because rate would have to jump above the 720, which would indicate, that we're looking for buy situations. And so the rate would be above the 720, and then our order, would be to go long, not to go short, but to go long here off of one of these moving average levels. So that's the order that I would place here. But we're sitting on the 720. So I'd write it down as like, if I didn't have anything else, maybe I might take that particular order, or maybe I might set that up. It might be a good order to set up. It's the Swiss yen, so that pretty much gets some momentum. When it moves, it definitely moves a little bit. So it's not like it's impossible for that to occur. So but I'd be looking for more, pertinent opportunities, at this point, things that look like they can yield something fairly quickly. As far as the Euro Aussie on this 30-minute chart, we're above the 720. Rate is above the 720. We've got our 200 here, our 100 and our 50 are in order still to the upside. We don't have separation yet between the 50 and the 100 just now, but that's because the rate has pulled down. It pulled down here to our 200. So we had the opportunity to place our order back on the 100 or the 50, which currently, the order would have just been triggered to the upside. So these would have been buy orders. So we're going to watch this a little bit. We're going to see what happens here, see if the moving averages kind of straighten out here, get back into order to the upside. And if they do, then there should be some movement to the upside. But right now, it might be too late for you to actually take this particular order because, the rate is past the levels at this point that we would enter. As far as the Euro CAD on the 30-minute chart, we've got rate above our 720. All of the moving averages are in order, so we have full trend, but we don't have the 200 over the 720 just yet. That looks like it could happen shortly. Our stochastic is up here above 82, so that tells us that there might be a little bit of strength to the upside. We've been getting pretty much upside momentum since at least the 19th. We kind of broke into this upside momentum, so I expect that maybe to continue. And then once the 200 jumps over the 720, we've got full trend. But somewhere in there, it's going to pull back. So I'd be looking for the pullbacks to the 50 and the 100 here as well. So Euro Swiss on the 30-minute chart. As we look at this one, we see that we did get this pullback past the 200 and the 100. Now the question is, where is my 720? So let me go ahead and make this a little smaller. There's my 720 because we can't see it. If you look at this chart, we can't see the 720 here. So we can't just forget that it's there. We need to be aware of what the overall trend is. So sometimes we can zoom out just a little bit and we see the 720s kind of floating along here on the top. So even though we might be tempted to place buy orders here, that's not what we want to do because rate is below the 720. Even though it's tempting, it's not as conservative a trade for us, and it's not within our trade strategy to do so. So we definitely would be just kind of hanging out here and just waiting. We're looking at, maybe short trades at this point based on the 200 or the 50 or the 100. Maybe even the 21 here if we want to be a little bit more aggressive. So I'd be looking at shorts at this point in time on this Euro Swiss. So it's a little bit counterintuitive, maybe something different than someone else might teach you. But for me, I think we just continue to do what the strategy states. Not every trade is going to work out, but if we do what the strategy states, a lot of the trades are going to work out for us. Here is the Euro Pound on the 30-minute chart. We have a very big reversal here. So we had this nice trend starting to develop here. We started to get some separation, and then the euro just plummeted against the pound. The pound has actually gained some strength today. We saw that across the market. We saw the pound, getting strong against most of the currencies. So this is not surprising. But there was a big push past the 720. So now rate is below the 720. We've got all of the moving averages below the 720. So we've got full trend to the downside. We're starting to get some separation. So all we're really looking for is a pullback here. The only other thing that we might have had was kind of catapult, but it would have required us to place the order, I think, a short order above our 720. Let's kind of run it and see what it would have looked like for us if it was a possibility. So we had this candle was our straddle candle. This would have been the second candle that would have closed negative. The close was 90.95, so our entry would have been 90.85. Right there on the 720. I'm probably not going to take that particular order as a catapult, even though it would have paid us. Now you can see the power of it. The catapult would have paid us in that instance. But I tend to look at my 720 and go, okay, I want to do that in the direction of whatever side the rate is on of the 720. That's the direction I really want to trade in. And so it kind of filters those trades for me because there's no guarantee that the 720 is not going to be a heavy floor for me. that doesn't, there's no guarantee it's not going to be a support level, and then it bounce off of that level and go back into this trend. So that's not something that I want to risk per se. Sometimes you'll win here. If you took that trade, you would win, but there's going to be that time when you don't, and and then it puts you into a position where now you have to think about how to get out of a trade that's not, we can call it a bad trade because it's not within the strategy, right? But how do we get out of a trade that's losing money? Even if it's a good trade, we did everything according to pretty much what the strategy says. Technically we do, because 720 is not really in the catapult strategy. We didn't really add that before. If we just took this as a pure catapult, yeah, we would have been successful with the trade. So it really depends on how you want to look at that. For me, I just am tending to use my 720 as my baseline, because that's the longer term trend. And what I've learned over time is that you really don't want to trade against the longer term trend. If you get into the longer term trend, say the longer term trend is to the upside, and you get this movement here, doesn't matter what this movement is or how deep it is, eventually it's going to return to that longer term trend. So, you can win a few, but you're taking risk, because when it decides to go back to the long term trend, you might be stuck in a trade. So I want to kind of stay on the side of the long-term trend, just trading along with it. It's just like a long river for me, like the Amazon River or the Mississippi River. Um, it's just like a long river for me. As long as you get in that river, if you just kind of float, you're going to end up at the mouth of the river, right? You're always going to end up at the mouth. You're not going to go to the beginning, you're going to go to the end. So we always want to be in the direction of trend. So euro pound, we're just going to be waiting for pullbacks against that trend to the downside. And then since we're below the 720, we'll take trades to the downside at this point. The euro yen, kind of the same thing. We're kind of hugging this 720 right now. So it makes it a little difficult to, take any trades to the upside. We probably could have set an order here, maybe on our 100 or our 200 or our 50, but because rate fell below the 720, now that changes my mind a bit. That's going to filter out that trade for me and say, you know what, this may not be the trade that we want to take at this point. But we could place it here. I'm not saying you can't place it there, because rate would have to jump over the 720 to continue that trend to the upside. So at the time the order would be taken, yes, it would be above the 720. But it's really, really close. So, I keep it on the docket if I needed something that I wanted to trade for the day. I'd put it maybe on the B list. I wouldn't put it on the A list of trades that, that I feel are the ones that can yield something for me now. I'd put that on the B list, and then just, if I don't have anything else, or I've made my profits for the day and I feel like I want to take one more trade, then that would be the trade maybe I'd look at. Euro New Zealand on the 30-minute chart. We have rate above our 720 still. We're hugging this set 200 right now. So we're free to place our order here on the 50 or this 100 to the upside. That's the order that I think we would take. Our stochastic here is above the 50. So if we go back in the direction of this open trend, then we've got some movement, some momentum to the upside. I think we will get some strength to the upside. We can trade all the way up as high as, this area here, where our kind of high was 80.11. So compared to where we might enter at 78.49, we'll call it 78.50. So there's about 50 or 60 pips to the high that we can get to the high. And if we go even higher, then that might even be an even better trade. So if I'm going to place a trade, I'm going to take that particular trade. As a matter of fact, I'm going to place an order on this 50. I'm going to right click, go to trading, and I'm going to put in my buy stop. It's already set for me at 0.01 lot size, which is the lot size that I trade on this account. So I'm going to set that up. We'll just put in a buy stop and we'll see what happens. We'll see if it puts us in that order and if it takes us up. And then maybe we'll check on it tomorrow, see what kind of occurred. If it continues on down, fine. We can delete the trade later. Maybe we don't get involved. But if it does come up here and past our 50 and our 100, and these moving averages tend to jump over each other and straighten out, then we're going to have trend to the upside. On the Euro US, we have trend to the upside here. Pretty much mature trend because all the moving averages are above the 720. The only thing that's really breaking is our 8 is because we're pulling back now. Our 8 is dipping down below our 50. It's already crossed our 21. So our order here at this point in time is going to be on the 50. That's the opportunity. So what I'm going to do, I'm going to right click there, go to trading, and go to buy stop, and I'll place an order there as well. So that would be the order that I would take basically at this point in time. Now, if it trades down here below, say between the 100 and the 200, I'm going to take this order and I'm just going to drag it down to maybe my 100. I can improve my order. So it doesn't mean that you're going to get executed necessarily at this order or that you have to delete it if you don't. You can actually just grab it and you can drag it to modify it. Your system should be set up to be able to do that. All right. If not, there, I think you have to click one-click trading. If you do like one-click trading, then it'll allow you to do that. But that would be the order that would be in. We've got this, we've got a lot of separation here. We're getting a pullback, but it's not super strong. Our stochastic is above our 80 point here down on the bottom. So I have a feeling that we may go back and actually pull this order off, right? And from where we are, the entry point's about 118.48. And then the top side of this here that was about 118.78. So we're talking about 30 pips at least until to the recent high. And then, so that's not a bad thing. If you can get 30 pips out of a trade, that's good. Pound Aussie, same thing. We are up above the 720, rates above the 720. It's trading above our 8 right now. So now we've got to wait for some pullbacks. So we got one back here today. We got one pullback past the 100. So our order should have been sitting here on our 50. And we would have been placed into that. Now, we did have a pullback here past the 100. So we could have dropped our order on the 100 here because we did pull back past the 100. But if we had missed it or were conservative, we would have placed it on our 50 up in here while it was pulling back. And both of those trades would have been profitable at this point in time, quite profitable too. All right, let's give some room here. Let's go over here to our pound CAD. Pound CAD, we see that we just developed our mature trend here. We've been in full trend for just a little bit. We've got separation in our moving averages, so we're getting some space here. Our 200 just jumped over the 720, giving us the full mature trend. Our stochastic is up here flirting with the 100 point. It's at 99.06 at this point. So there's definitely some strength to the upside on this pound CAD. Like we talked about the pound being strong. We see here, we thought that we were headed to the downside. We were actually underneath the 720. We had full trend, and then boom, it just blew its way through the 720. And now we've got trend to the upside. So people think Forex is a little bit crazy. It is a little bit crazy sometimes. Just these things happen. But a lot of this, it could be news based. Fundamentals are driving the market. So that's why we talk about those on the Daily Market Overview show. We talk about those fundamentals as well, because those are the things that might be the catalyst that move the market. And once we get some direction, then it's pretty much a strong head of steam, and that's where you gain a lot of pips. So it's difficult in a way, it's difficult not knowing when it's going to occur, but it's not difficult in just the execution of it and the expectation that we should get, a number of pips out of our trades. That's, we have this expectation that we should be getting paid on our trades. Whether it's 30 pips, 20 pips, whatever it is that you set that you want to gain from your trade, or, you want to just break even and let it run, then, that's good too. So, but our expectation is that what we set up strategy wise is going to pay us. So here we'd have to be waiting for some type of pullback. We don't want to get caught in this while it's pushing so strongly to the upside. Rate is really above the 8. If you look here, it barely touched even the 8. So that tells us there's a lot of momentum there. So good. So we see this in the pound Swiss as well. We're going to see this a lot in the pound. We don't have mature trend just yet. We've got full trend, but we don't have mature trend because our 100 and our 200 are still below our 720 here. So, but you can see we've had this real momentum. We broke this full trend to the downside, this mature trend to the downside broke, and we just broke to the upside. So had we broken past the 50, we broke past the 100. Had we placed our order on the 100 or the 50 to be conservative, we would have never got into these short orders. The rate would have just kept on going, right? So we don't want to follow it too closely in this scenario here because we want to give it room to breathe and to move back and forth and fluctuate. And, you know, that's why I say we want to be a little more conservative. So if we get past the 100, our order should be on the 50. If we get past the 200, our order should be on the 100. You know, so that gives us the market room to kind of fluctuate. But if it's really strong about going the opposite direction, it's not going to come down here and put you into that order. It's just not ever going to touch those moving averages. It happens sometimes, but most of the time, if we got a real strong head of steam, it's not going to happen that way. On the pound yen, same thing. Mature trend to the upside. All the moving averages are in order to the upside. Rate is above the 8, so it's definitely above the 720. So we're looking for pullbacks to the 50 or to the 100. And then, you know, we'll place our buy orders there. As far as the pound US, same thing. Mature trend to the upside. We're getting a little bit of a pullback now. We're pulling back just past our 21 here, but we want it to pull back just a little bit deeper. Definitely maybe at least to the 50 before we place an order on this 21. Right, so we're waiting on pullbacks there. So it looks like there's going to be some continued momentum in the pound to the upside. So we'll have to be watching that. That's something that we want to think about because pretty much across all of the pound pairs, that's what we were seeing, that momentum to the upside. So there's strength, that tells us there's strength in the pound, not necessarily weakness in the other currencies. As far as the New Zealand CAD, on this 30-minute chart, rate just jumped over our 720. We're trying to develop a trend here, a full trend here. We've got our 100 just about, you know, trying to jump over our 200 at this point in time, but we don't have the separation. We don't know for sure if the 720 right now is going to be our floor or our support at this point in time. So we're just going to kind of hang out and let this develop. This is something that we might want to keep on the docket. It may or may not. It's already Wednesday. You know, what are we? Yeah, we're at Wednesday at this point in time. So we're going into Thursday, Friday. We may or may not see this fully develop in the next 2 days. So this might be something early next week where we know for sure whether it's going to jump over, you know, all the moving averages are going to jump over the 720. It's very possible. So we'll just have to wait for it to develop. New Zealand Swiss on a 30-minute chart. We have rate below our 720. So we're looking for opportunities to the downside. So my opportunities right now are a short on our 200, our 50, or our 100. Our stochastic is just coming up here, probably touching right about the 50 mark. Yeah, it's at 48.25 or so. So it's just shy of the 50. Where rate is not above the 720. So those are the real opportunities that I've got right now. Short orders on either one of these three moving averages, depending on how conservative you want to be. New Zealand yen, we've got rate below our 720 here. We're kind of just bouncing back and forth right now. It looked like we were creating a little bit higher lows, a little bit higher highs. Let's kind of draw that in here. Just roughly, we'll kind of put the channel here. This is kind of what we were seeing, just this channel. It's kind of widening it out a little bit as we're getting this volatility and this movement. But just recognize we are underneath the 720. We keep kind of falling away from that. So we're going to keep an eye on this. The moving averages are not in a place where I'm really eager to trade at this point in time. I think that I'd probably just let this one go, let it get more developed so that I can figure out what's going on with it. New Zealand US 30-minute chart, we have rate above the 720. So the New Zealand seem to be all over the place, some below, some above the 720. So I don't think the New Zealand dollar just by itself has a real direction right now. It doesn't have a lot of strength in one direction just by itself at this point, because we're seeing, you know, varying degrees of pushes in the New Zealand dollar, up or down at this point. So I think I'm sensing some weakness there in the New Zealand dollar itself. Against the US dollar, it may, continue on this move up. Only thing we're really waiting on at this point is the 200 to jump over the 720. We've pulled back here. We pulled back a little bit past the 50. If I'm doing anything, the only thing I might do is place an order here on the 21 long, a buy order on this 21. And that would be the order I think that should take us up. So if we get some weakness in the US dollar, that might work. So what I'm gonna do, I'm gonna right click, go to trading, put a buy stop here. It's right at the level of my 21. So we'll see what happens here. It looks like it's trying to develop trend. There is a nice little pullback here. That's like what we want to see. We know that happens sometimes early in the development of a trend. It will pull back like that. So, that's a good sign. So I feel comfortable placing that order. It's a long order, so, and we're above the 720, so that's kind of good. US dollar CAD, we have right below our 720. We did get kind of some momentum to the upside. It really depends kind of on what happened with the Dow Jones today. I was kind of doing some other things just lately, so I'm going to look and see what our Dow kind of did. Our Dow was down 97 today. So we're off 100 points. When I talked about the Dow, I told you it's a negative correlation. So since the Dow is down, the dollar is stronger. So I think that's what we saw here. I was taking a look at the futures. I know it's a little bit early. You can't really tell what that's not really going to tell you anything until later. But right now, the futures are signaling another down day tomorrow. It's showing 188 points off on the Dow futures tomorrow. So maybe there's going to be some continued, strength in the dollar overnight as that futures number develops. But right now, we're still underneath our 720 here. We did push past the 200. So if I'm placing orders, I'm going to place an order maybe here on this 200 to sell, right? That would be, I'd be looking for a short order at this point in time, because if for whatever reason the Dow rebounds tomorrow or it turns positive, then I think this dollar, the dollar CAD is going to fall. US dollar Swiss, kind of the same thing. We did get some push, back past our 100 now. So my order would sit here on our 50. That would be the place where I would take a short order. So I'd right click, go to trading, sell stop, and place a short order there. They're pretty much in the same spot. Our 21 and our 50 are in the same spot. We're just past the 100. If it continues higher, then I'll take this and I'll slide this order right up to my 100, just like that, and just drop it in. I don't want to be too close right now though, because I want the market to fluctuate, do its thing, and then put me in the order when it really decides to come down. It gives me the best opportunity to be conservative and to have the opportunity to win. On the US dollar yen, same thing. We had this mature trend to the downside. We're below the 720 on rate. We're pushing back now towards the 50. I think we're just getting that push, just because of, the lack of the stimulus talks, number one, and, the Dow Jones just falling. Here, if you want to be aggressive, you can place an order here on this 21 to go short, or you can wait till it pushes back a little bit more towards the 50 and then, maybe short on the 50 if the rate jumps over the 50. So we'll have to see how this turns out. So this might be something that you put on your B list a little bit, something that you're watching. All right. So I hope that you guys got some great trading opportunities. You saw some opportunities. You saw me actually place a few trades here tonight that we would take based on the strategy that I'm teaching you. It is a live account, so there is real money there. So that means that, any trade that I'm putting there, I'm going to leave it and see, what happens to it. So it's live money. So I'm not, saying, okay, this is a demo or something, and I don't care what happens. I'm definitely trading live personal money. So, so hopefully, you guys got some good ideas. Hopefully you're catching on to what the strategy is, the simplicity of it, just viewing it on a daily basis. Hopefully you're able to catch on to it and able to execute it. It's not very hard. It's not complex. It's the simplest thing in all, to gain pips. It's very, very simple, a simple way to gain pips. And that's all we're really looking to do as traders. I think people, you know, kind of take it to heart just a little bit too much. I mean, just, when I see people like really being, just so, I don't know, so maybe engrossed in it and in the analysis and everything, I just kind of get the feeling like they don't know what they're doing, or they don't have they have just enough experience to maybe be a little bit successful with what they do, and they win a little bit, so they feel like they just have to go deeper, and they keep going deeper into the rabbit hole. But as you become more experienced as a trader, you don't want it to be difficult. You make it as easy as possible. You start taking things away. So when you start taking things away in your analysis, now you're pulling out the trash. You're pulling out the things that don't matter, the things that don't, aren't going to make a difference really in your trading. Um, so you're starting to get more into the professionalism and away from the amateurism. That's what I see. Um, so most of the traders that I know that, have been successful are fairly simple traders. They have different knowledge sets and things like that, but they're going to do things in a simple way. It's not super duper complex. You don't need an MIT degree to do this. You're just trying to get pips, and the market only does three things. It only goes up, it goes down, and it goes sideways. That's all it does. And you just got to be on the right side of those in order to profit. So that's what we're looking to do. Just be on the right side of those and profit. And, then maybe later on you can get into, you kind of get progressed to a point where you're taking things away, you're simplifying your process, you're making it very, very easy to do. And then you look at it and say, okay, what are my flaws? What flaws do I have? I know that my personal flaw is wanting to exit early, especially when I have a profit. So I still have something in there that's tied to fear. Even though I have experience with trading, I still have something in my personality that's like, I just don't want to lose the money that I've gained. So sometimes I exit early, but, I struggle with that. Right now, I haven't really totally tackled it, just because maybe it's okay. I find enough opportunities to be profitable where it's fine for me to close out those trades. I don't feel bad as long as I execute my trade right. Okay, I'm okay right now. Now I might tweak it a little bit. I think with the auto traders and things like that, it helps you tweak it a little bit. If you leave it alone, then it makes you kind of wait those trades out somewhat. So that's why I kind of like the auto traders. And I'm not a manual trader. Like the trades I placed tonight, like those, I haven't done that in ages. So I just want to see you. I want you to see me actually do what I'm teaching you to do. And that's the reason why, I'm doing it here now tonight. And I'll probably continue to do that every once in a while, just place some trades manually, because I want you to see that I can actually do what I'm teaching. And, I practice what I preach. Even though I trade auto trader most of the time, it can be done by hand. It's not something that's impossible. You just have to have time to be able to kind of, do your analysis and place those orders by hand. And if you don't have the time or the knowledge, then the auto trader is good. The auto trader programs are definitely very good. So I'm going to get out of here now. It's almost time to eat. I know it's late. I had another class before this. We didn't get a chance to eat yet. So I'm going to get out of here. So I hope that your trading is going well this week. If you have questions, definitely feel free to contact us through the website. You can log in and contact us through the contact us page, or, at our email info@theiLiacademy.com. Or if you have my WhatsApp, you can hit me on my WhatsApp. All right. Okay, well, thank you so much for your attendance tonight. I hope that your trading goes well, and I wish you a good night. Have a great one. Bye-bye.